Good morning and welcome to the Business Standard Morning Show. I'm Debarghe Sanyal and here are the top stories for the day. Even as the 5G rollout continues across India, Prime Minister Narendra Modi unveiled India's 6G mission and an official testbed project that will enable research into these next-gen network technologies. The government has already appointed an apex council to oversee its Bharat 6G project, which has the potential to turn the second largest global telecom market with 1.2 billion telecom users into a rule maker from a rule taker. So what are the major challenges that will have to be overcome for the mission to succeed? Bhashwar Kumar brings you the answer.
Prime Minister Narendra Modi unveiled the Bharat 6G vision statement on March 22nd, setting the target of launching the sixth generation of telecom services in India by 2030. On the same day, PM Modi also unveiled the official 6G testbed project. A consortium of Indian institutes of technology, including Guwahati and Madras, have come together for the testbed, which will provide an R&D platform to startups, researchers, and industry. The sixth generation telecom network, or 6G, will provide internet speeds of up to 1 terabytes per second, or 1 trillion bytes per second, with ultra-low latency. Meanwhile, the average speed range of the latest 5G technology lies between 40 to 1100 million bytes per second, potentially hitting maximum speeds of 10,000 Mbps. 6G will enable smooth machine-to-machine and machine-to-human interactions. It will boost the development of virtual and augmented reality. It will also make constantly communicating self-driving cars a reality. But if all of this doesn't interest you, 6G will reportedly be up to 100 times faster than 5G, allowing you to download over 140 hours of Netflix in a second. In the first phase of the 6G project, the center will provide support to explore new ideas and pathways, with the academia, industry, and service providers coming together to identify priority areas for research. With government support, these ideas will then be used to develop use cases, intellectual properties, testbeds, and prototypes, which will be commercialized in the second phase. The Bharat 6G project is part of India's efforts to attain a toehold in the global supply chain for emerging technologies, such as satellite and terrestrial communication gear and components. India is also aiming to take part in global discussions that are currently underway on setting 6G standards. As part of this plan, India is pushing for a greater say in the ongoing policy making at the International Telecommunication Union. Clearly, a start has been made.
A typical generation in telecom is about 10 years. Okay, the first 3 or 4 years is about understanding what technology goes in, doing the vision for the particular generation, followed by standardization and followed by making the equipment and deployment. Okay, this is a typical time 10A. So now we're in the initial phase of things. So at this time, if we get into 6G, either through test beds, building test beds, or through attending standardization activities, what happens is we would have a say in what is going to happen globally. And this is kind of important. It's important that we get in the beginning of the cycle rather than at the end of the cycle. In this process, we're also going to generate IPR. IPR that may go into the standards later on.
Still, significant challenges will have to be overcome. According to a Nikkei and Cyber Creative Institute analysis of patent applications for 9 core 6G technologies, as of August 2021, China topped the list with slightly more than 40% of patent filings. India did not even figure on the list back then. And while some progress has been made, with India currently holding over 120 global 6G tech patents, there's a long way to go. According to experts, countries with more patent filings have a bigger say in industry standards. India will have to prioritize generating new intellectual property and significantly up its game when it comes to clinching 6G patents if it hopes to compete with the likes of China. This will require greater coordination between the industry and academia, along with government support, than is presently the case. And experts Business Standard spoke to also highlighted two other significant challenges India will have to overcome to become a major 6G player.
See, one that we really don't have is fabrication, chip fabrication. So in 6G, when we go to higher frequencies and things, you require specialized materials and specialized processes so that the chips operate at those high frequency RF and other things. So this is so this is going to be one bottleneck for India.
So scale is, I think, everything. Scale is the most important part. And I personally visited multiple times facilities in China. I've seen facilities in Korea. What I find that the kind of focus they have got on scaling youth from all the elements. Like we have done some study research, even item like handset, there are maybe sub-component wise 200 plus areas where technology has to be developed. So if you really want to become a good manufacturer. Same way, I think all aspects, whether it is radios, whether it is BTS and all other network components, everywhere there's a lot of research is required. And engineering students, which are today studying, they are studying maybe still a dated I'll say syllabus.
The 6G mission's success will also call for coordination between the semiconductor and telecom equipment PLI schemes. Meanwhile, the government's report on the 6G mission has suggested expeditiously creating a corpus of 10,000 crore rupees for development and deployment. It has also argued for the use of the entire gamut of available funding instruments, such as grants, loans, VC funds, and fund of funds. With the US, Japan, EU, and China already having committed billions of dollars to 6G, progress on this front would be a good first step towards success.
Even as Turkey and Syria still reel from a devastation caused by the February 6 earthquakes, northwestern India has also faced no less than 10 significant earthquakes and aftershocks. The most recent one, which originated in India's western neighborhood, was a 6.8 magnitude earthquake in Afghanistan. Experts link the increase in earthquake activity to the movement of tectonic plates in the Himalayan region. They have, in fact, warned of stronger jolts. But is India ready for a major earthquake? Here's our report. Delhi was witness to scenes of confusion as citizens rushed out of their homes in panic late in the evening of March 21, when tremors from a 6.8 magnitude earthquake in Afghanistan shook the Indian capital. Amid the chaos, one thing became painfully clear. No one had a clue about what the proper procedure for evacuation was or where one could seek shelter. Across several of the capital's neighborhoods, streets became more crowded as people rushed out of their homes, causing traffic congestion. Delhi isn't the only mega city in India to face such situations. In the past 5 months, North India has been shaken by multiple tremors, causing panic among residents and raising concerns about the region's seismic activity. Overall, India has been jolted by at least 10 earthquakes measuring more than 4 in magnitude since the beginning of 2023. Besides the tremors from trans-border quakes, we were shaken by several earthquakes with epicenters in India. Mangan in Sikkim recorded the earliest such instance on February 12. This was followed by tremors in Sylhet, Bangladesh, Jumla in Nepal, Arunachal Pradesh, Andaman and Nicobar Islands, and Gilgit-Baltistan in Pakistan, among other areas. Meanwhile, northeastern India experienced at least 30 minor and light tremors between January 1 and March 14, 2023. On January 1, a 3.2 earthquake hit the hill district of Assam's West Korbi Anglong. Experts warn that such frequent tremors and earthquakes are a wake-up call, particularly for states in the Himalayan region. The region falls under zones 4 and 5 and is seismically the most active. They call for preventive measures to minimize damages before a major earthquake strikes. One way is to quicken the adoption of preventive technologies. However, we are yet to have the know-how to predict earthquakes in short term.
What we have now is a hazard maps. We can actually calculate the probability of an earthquake within the time frame of several years. There are also, modern scientific methods, machine learning methods, which they try to now you look at the earthquake data and come up with certain patterns. And also we have been able to use the remote sensing satellites to see if there is any trends in land deformation before a big earthquake, like in 2004 Andaman earthquake. And if you look at the examples in Japan, and you might want to learn some lessons from them and how they are using technology, the upcoming technology to strengthen the buildings. For example, the base isolation structures, which they are implementing very successfully there.
So, what are the challenges in implementing regulations to mitigate the impact of a major earthquake in India? Does India lack the required regulations, or is non-compliance the bigger problem?
No, there is no dearth of regulations when it comes to seismic safety in buildings. The problem that is there is of non-compliance, of course. See, we have to understand that our cities are largely self-constructed. So let's take the example of Delhi. Nearly 80% of buildings will not be able to withstand an earthquake. Because these buildings are largely self-constructed by the informal sector, by the people themselves. So, even if they get the plan approved by the corporation, there can be no guarantee to its seismic safety. Another problem is the buildings, high-rise buildings, are operated and maintained by RWAs. And you tell me how many RWAs know about this, that they have to conduct such structural safety tests. So this process is there, and we also have all the codes with us. But the problem is that people have to be made more aware.
Experts point to countries like Japan and the United States, mainly California, as examples of geographic regions that have gradually corrected faults in their urban planning and architectural design to counter the high seismic activities. It is now to be seen how promptly the Indian government responds to these earthquakes. From an earthquake analysis, here's some news that could give a jolt to the mutual fund industry. Last week, the Centre amended the mutual fund rules in the Finance Bill 2023, removing long-term capital gains tax and indexation benefits. Experts now fear that this may trigger an outflow of funds from an industry which is still in a nascent stage. Our next report explains the implications of the move and how it may change investment options for investors.
The nearly 41 trillion rupees Indian mutual fund industry received a nasty surprise from the government last week when it passed a bill to bring tax parity between debt mutual funds and bank fixed deposits. With this, debt funds with less than or equal to 35% invested in equity shares will be taxed at the investor's income tax slab and treated as short-term capital gains. At present, all gains from the debt fund investments of over 3 years are taxed as long-term capital gains at the rate of 20% with indexation benefits or 10% without indexation. Return on investments of less than 3 years, on the other hand, qualify for short-term gains tax, where the investor has to pay tax at his slab rate. The debt mutual fund investments, however, will not be given indexation benefits from 1st April. Analysts said the move is a big blow to debt mutual fund industry, which commands total assets under management worth 14.62 trillion rupees as of February 2023. According to VK Vijay Kumar of Geojit Financial Services, the changes in debt fund taxation, also applicable to gold and international funds, will have far-reaching consequences. However, since investment up to March 31, 2023 will be grandfathered, investors can invest in debt funds and international funds till the start of the next financial financial year. Once enforced, the move may have a negative impact in the retail category as ultra-high net worth and high net worth individuals may choose to invest in safe havens like bank FDs. The overall impact of the move will be twofold, analysts said. For one, it may trigger a flight of funds from debt funds to equities or bank fixed deposits in the short term.
Very soon, the rate cycle would peak out, even whether you take a Fed, a lot of expectation that the yesterday hike would be the last one, or there could be another maximum 25 basis hike. Same thing would happen to India also. So with another 25 basis hike, if monsoon is good, then you will see the reversal of rate cycle. So the point I'm saying is that at the peak of the rate cycle, thanks to the structural change in downward trend in the overall interest rate, neither bank deposits nor mutual fund debt would be attractive for people from the return perspective. Only those who have a major weightage for safety perspective would opt for the bank deposits. But if somebody is looking at a return perspective, it is better to take a little risk and go for the large cap stocks or large cap mutual funds in the equity asset class.
Sandeep Yadav of DSP Investment Managers also shares a similar view. For any industry, removal of tax benefits is not desirable. In the short term, there can be a flight of capital to alternate investments such as bank FDs and equities. Secondly, there could be structural implications for corporate bond markets.
Mutual funds were one of the most active players in corporate bond market and used to aid liquidity. And if at all, this regulation impacts the future flows into debt mutual funds, specifically long-term debt mutual funds, this will also have some structural impact to some extent on the bond markets liquidity specifically in the coming years, and we need to wait and watch.
That said, the industry is considering engaging with the government and arrive at a mutual agreement. Analysts say debt mutual funds still offer a credible way to investors towards long-term corpus building and may not completely go out of fashion. Today, the markets will react to global and domestic developments in a holiday truncated week.
The Wagner Group, in a recent warning to Russia, said the Ukrainian army is preparing a major attack to cut off Russian forces in eastern Ukraine. The group's founder, Yevgeny Prigozhin, said this attack could take place around late March. So, what is the Wagner Group? Sanika Sarod decodes it for you.
Russian Defense Minister Sergei Shoigu recently received a warning from the country's Wagner Group that the Ukrainian army is preparing an attack to cut off Russian forces in eastern Ukraine. Wagner Group's founder Yevgeny Prigozhin in a letter stated that the large-scale attack was anticipated to take place in late March. He added that Wagner's forces currently control 70% of the Ukrainian city of Bakhmut. The Wagner Group is a private military company based in Russia. It is named after Wagner, the nickname of its first commander, Dmitry Utkin. These private military companies are hired by various clients to carry out military operations. These private armies are not subject to the same taxes and rules as government forces. A major reason why countries use private operatives is that they can later deny involvement in a highly sensitive operation. Wagner Group comprises mercenaries who are mostly former soldiers and members of the Russian Special Forces. Prigozhin, referred to as Putin's chef, made his fortune as a caterer. He started several other businesses and then formed this group. The Wagner Group first surfaced in 2014 during Russia's annexation of Crimea. Claims were made that the group's men trained and armed the Russian forces. The group gained notoriety for its alleged involvement in propping up Bashar al-Assad's regime in Syria. It made international headlines in 2018 when several of its mercenaries were killed in a US airstrike in Syria. The group also fought alongside Libyan commander Khalifa Haftar and has its presence in Mali and the Central African Republic. Wagner has been accused of human rights abuses, war crimes, and other illegal activities by the United Nations. In Russia's invasion of Ukraine, Prigozhin is in charge of the private army. The group is leading the war in eastern Ukraine. As per US estimates, 50,000 of Wagner's mercenaries are stationed in Ukraine, of which 40,000 are convicts. Prigozhin has claimed full credit for capturing Soledar from the Donetsk region. He offers cash incentives and commuted sentences to prisoners in exchange for military service. The oligarch has slammed the Russian government for incompetence.
I will achieve, I will fly high. SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
In the latest news on the Russia-Ukraine war, the Wagner Group has just taken full control of the AZOM metallurgical plant in the north of Bakhmut city, according to a video posted by Russian state media and verified by CNN. That's all for today. For more news and analysis, please log on to business-standard.com.
For more news, views and updates, subscribe to Business Standard on Google Podcast, Apple Podcast and Spotify. Also follow us on YouTube, Vimeo, Instagram, Twitter, Facebook and LinkedIn.